Everybody wants to blame boomers for the rise in housing prices, but there's a lot more to it, and you got to do the research to understand what's going on. Before you start blaming your grandma, your cousin's grandma, your aunt, and everybody else, really understand what's happening with the housing market before you make those types of assumptions. Houses have been extremely expensive, especially after 2008. And even pre-2008, houses were through the roof. The reason being is because banks made it extremely easier than ever before, for individuals to be able to get mortgages to buy these homes. Prior to 2008, it was almost like anybody that had a pulse can get a mortgage for a home, whether they could afford it or not. What ended up occurring is those mortgages were then packaged up by banks and then sold and securitized through mortgage-backed securities and sold on Wall Street to all these different investment houses, etc. It was more profitable for banks to essentially underwrite mortgages to individuals, whether they could afford it or not, and then securitize those same mortgages and then sell them to investors that were willing to take on that risk. They didn't care if that person couldn't make the mortgage payment. And if everybody defaults at the same time, then you have a bubble. At the same time, you had credit default swaps being issued by companies like AIG, essentially as insurance for these defaults. But what happens when everybody defaults at the same time? You have another 2008. Everything crumbles. Boom. All the while, because mortgages are constantly being underwritten by banks and individuals are able to get this capital to finance a home, whether they can afford it or not, that is essentially going to drive up the price. You have a lot more demand pressure, but the supply is limited. The supply is limited because there's a lot of regulatory hurdles and zoning issues across the country in terms of how many homes can be built. And that's a whole nother conversation. But at the end of the day, the ease at which individuals can get these mortgages with cheap capital to be able to term out these loans, whether they can afford it or not, and the securitization of these loans is a domino effect that leads to housing prices going up higher and higher and higher. It's simple math. It's legitimately math. The Federal Reserve prints a lot of money. They infuse this capital into the market. They end up affecting the short-term rates by driving them down when more liquidity is pumped into the market, and that makes this capital more readily available. As a result, there's more liquidity chasing less goods, housing included. And if your dollars are buying you less, essentially by the dollars buying you less, it's going to become even more affordable to afford these things. It's all math. Now, with rates being where they are right now and the administration calling for rates to be cut, this is going to lead to higher home prices. It's not going to make them more affordable. Nobody's asking to make houses more affordable for individuals. This isn't what's going to happen. They're essentially going to pump down rates. They're going to drop down rates. And essentially, when they do that, the cost of borrowing is going to be cheaper. The price of homes is going to go up. And there will be a bank that's going to extend more capital to individuals, whether they can afford it or not, to buy a home. This is why other stores of value like gold, silver, Bitcoin especially, are essentially going up because they can't be printed as readily available as currency. They can't be manipulated the same way. If you price homes in other stores of value like gold or like Bitcoin, you can see that the price is falling depending on what you're denominating the house in. But if you think that rates dropping is going to make houses more affordable, no, it's just going to allow the banks to essentially offer more loans to individuals. There's going to be more capital throughout the economy, more liquidity, and housing prices are going to continue to go up. However, there could be a seismic shift in terms of all the debt that's readily available that results in a correction, and who knows what that's going to look like. The reason being is because you have student loan debt, you have credit card delinquencies, you have car loans, you have buy now, pay later for Chipotle burritos, and all these other factors making this one big debt bubble. It's not good. So before you start blaming grandma, grandpa, your auntie, and everybody else, make sure you do some research and understand what's going on. It's way deeper than what you may think on the surface. Comment your thoughts below.